Good morning, good morning, good morning. Happy, blessed week. I'm your host here, Nani Gurua. So just want to show you a very simple, clear structure or a very simple method to identify a shift in market structure. Yeah, using your liquidity void or liquidity gap, filling up and down, and a change of market structure. Yeah. This is what we call liquidity gap. When we talk about liquidity, we're talking about the structural highs and lows of the market. Yeah, those are the areas of liquidity pools that's available in the market. Like for example, here we have right from here, you can see, so market moves in phases of these liquidity gaps. When one liquidity gap is filled up, market usually returns to the opposite side. That means all the liquidity pools has been taken out by the market makers. So, for example, this is a gap created by the buyers here, and after being filled downward, what next is you see price moving in opposite. So to create the essence of this liquidity gap is to create market efficiency, what we call the equilibrium, the price equilibrium. When price is at equilibrium, that is the time we have what we call the range, and the time for market makers to start acquiring assets. So they use the range to do what, to acquire the highs and the lows of the market, and probably distribute the profit in opposite side. So when market moves out of that balance or out of that equilibrium, it creates the chaos. It creates a kind of a pattern, so to distribute the profit upward or downward. After distributing profit upward or downward, it is assumed that the gaps, the liquidity highs and the low has been filled out, and the market returns back into equilibrium to create a new opportunity for them to. So market, that means whenever you see a range, above that range we have the imbalances or inefficiencies, but market usually return back into the range to create a new structure. So this is what happens up and down. So you can use this as, I'm not saying you should use it as a point of entry, but you can use it to gauge your, to identify where market likely go, where it will be a possible market shift or possible market price reversal, so that you are not being caught in the web of not knowing what to do, try to still hold on to your profit or losses, So you can use this as a guide while you are navigating up and down in the market. So that is the essence of doing this. It works, but you have to use the change of character or the BMS and the liquidity sweeps to see, to filter if that is likely going to be the end of that, the resumption of a new structure. So if you were here, let me check out this. If you were here, for example, and you were here, for example, and you got this, you should actually know that this is strong. Before here, this is strong supply strong zone, yeah, created in the market. So strong zone, yeah, which is being retested by this. So while market was trying to move upward, you can see that there are gaps, try to created by these highs. There are gaps created by the previous highs in the market here. So that's what market is trying to react to collect the the liquidity above these highs. You understand? So as market starts collecting those liquidity pools, it was filling up the gap being created here. So that means this place serves as what as the market equilibrium or the market range. So whenever market moves out of that range into imbalance or what we call market efficiencies, it usually return back into it after distributing profit to return back into it. So I mean to create another at the bottom of it here, there's another range. To create another range created. So that means as it starts moving upward, once it gets inside this range, and where you start to see it as the markets usually create, come back, fall down to clear out the gaps here. Yeah, we basically represent by rectangular. I mean by triangular box. So market usually clear out those poles, and in that essence, it's filling up the available gaps in that perspective. So if you play forward, you can see that play forward. Yeah. So it's cleared out, So that's the boards were being cleared out by the market makers there into the range, into that zones, And once you get this a liquidity grab, it's a liquidity grab, then we want to see what? We want to see a move below this market structural low, this higher low, this next higher low. So we want to see anything from here down to this place, give us will give us our position for sell. Yeah. So this is how to know when there's a shift in structure, because right now we have this as a POI, a point of interest or supply zone, and market is trying to move out of that zone to fill up these these available pools here below the market low, previous high lows. So market will usually fill up this place, fill up these. So once you fill up this place, it will now do what? Starts as that place is being filled up, it starts moving to, because this place is trying to create another void. Yeah, gap. Whenever there's a gap in the market, what we learned from the market legend Steve Nisi, whenever the Japanese principle of trading the market, that whenever there's a gap or market window, as market window, market usually goes back to fill up that window. So that's exactly what is happening here. So it's basic, it's fundamental, yeah, fundamental truth. So whenever a gap is created, markets will usually go back there to fill up the gap and continue in the direction opposite to it. Yeah, that is it. So you can see that as prices coming down, filling up the gap, the shorts are being covered, and after this, what we experience is that we have distribution to the opposite. Yeah, and the short has been covered. So it is your duty now to go to do what this is a weekly chart. It can happen. You can see it in daily chart. You can see it in 4 hour, depending on your lifestyle of trading. If you are a scalper, you can use what you just need to do is just to go to your lower time frame and to see the setup for entries, in order to get a good risk reward ratio. Yeah. So once you come to the end of this place, you actually know that the market will start shifting upward, right? Yeah. So what you just need to do is just to get this is a liquidity graph here. Taking off that low liquidity graph into these zones. Then what we want to see is that take note of this place. This is a week. With this long week, we serve as a market liquidity. Yeah, there are pools of liquidity placed here that market will later come to grab. Market must probably, so you should not ignore this long week. Yeah, you see in the future, market will probably come down to tap into this week liquidity pool, and they start moving upward. But we rightly know that anything from this place, down to this place, usually end in market downturn. So that we have upturn or rally in opposite. So after this body has been cleared out, and we have this gap being filled up, what we see next is that this potential a low here, right? And you can see that internally we have the internal structure right here, gaps infinite, and price move downward. Yeah. Price move down, feed up this place, move upward, feed this place, feed this place. So that means this gap will be filled up and price will move down. Yeah, probably into that week, they start moving up to clear out this, the available market piece there, enter into this place, they come navigate into another pool. Yeah, so that is what you likely go to get here. So let's play for and see how that place will. Yeah, so do you go up, clear that board, then probably moves in the opposite, you can see that this week has been taken out. The liquidity available here has been taken out, like I told you. So when you go to a lower time frame, you usually get higher and other blocks or a particular zone hidden in that week. So anytime you have a week at the end of a structure or a trend, usually is a hidden zone in a lower time frame. Yeah, it's a hidden zone or other blocks in a lower time frame. So that when you constantly wonder why markets decide not to end here into the body, but it starts going down because they are hidden. There are hidden zones or other blocks here available in this. So that information of that week is price rejection. One comes down, then the other one goes upward. So sellers come down. Then what we have later on is that buyers push it upward. So it's a market rejection. A kind of block or a zone has been created there. So market will look that and take and usually come into that week. So here you must have got it down. And if you look carefully here, you see that the void has been filled here. The void has been filled, and what happens? Market moves. Move with the opposite to clear out these highs, new highs being created. Market will clear out all these highs, then it comes into this feed up this liquidity gap here. There's a gap because this has not been tested. Market will usually go up there and fill up that gaps, and and what we have is another downturn. So you can use this. You can use this as a guide. Not I'm not saying it's as a point of entry, market entry. You can use it as a guide. You will go to your lower time frame to see the setup for entry. You know, SH, plus BMS plus RTO. So you can use that as your guide while you use this formula or other trading plan for entry setup. Yeah. So this is the entry formula for AMD, which we have been using. SH. After I say you got this is SH, you know, BMS, SH, that is stop hunt manipulation. After manipulation distribution, then we have the BMS or liquidity grab there. Have a BMS here. This is BMS. This is BMS. This is BMS. See it? Equal highs taking out. Then another high is taken out. So that's BMS coming to this, then blast through the SH, tap into this liquidity grab, and we have another liquidity grab here. So that means we're going to look into this play to kind of buy right there in a lower time frame, not in higher time frame. So let's please forward, play forward. We'll see this. So another liquidity has been taken out. That's why you see price moving into the opposite. This is a weekly chart. In the lower time frame, that will be a good pips. You know, measure it. Let's see the after the liquidity grab is breaking. We are almost about 778 pips being moved. You know, this place clear out, the price move down. So whenever if this is filled up, usually have a reversal into 1,827 pips by pounds USD. You understand? So this place fill up this place, this gap is filled up, price move. This guy price move into the opposite. You know, gap filled up, price move into the opposite. Price move up. Liquidity gap filled. That is a new liquidity gap being filled. And what we want to see here, you want to see a shift in market structure here, because this is the potential. This is a potential zone, right? It's a potential zone. Why is it a potential zone? Because it engulfs. There is a gap of liquidity, then it creates a market structure, break of market structure, then a move downward, a significant move downward of the zone. It creates a gap, the price moving back into it. So let's play forward. I see that. So your confirmation will come from this shift. So see this. Move to cover up this liquidity gap, move upward, cover it up again, move downward. That is essentially what is happening. What's happening there. So you can get that. So after the BMS, what do we have? We have RTO, go to your lower time frame. Whenever I'm trying to use, you can see that there is, whenever there is a liquidity gap, it feed it up, come down, feed this place up, shift upward, downward. So whenever you see a liquidity gap, usually know that it's an indication of price moving the opposite. So right now, so that's why we have discovered that the pounds USD sell downward. You cannot push it to this place. after covering of this liquidity gap, and what you usually get is the opposite distribution of profit. Yeah. So, and like by next week or thereabouts, or 2 weeks to come, you start seeing market moving the opposite to this supplies to come out of this. So that is how. So probably it could be a kind of grab of this before, but anything from here, start expecting, wait to see what we call a liquidity grab, then break of market structure to confirm the end to that downturn. So guys, use this as a guide. Use this as a guide. Then with a lot of influences on your side, you'll be able to identify whenever a structure is going to end or whenever a new structure will emerge. God bless you.